If you look at the U.S. Trade tension with China, I think it will create slower growth in the economies around the region also, and it will affect the oil prices. And oil prices is very important for the GCC. So it's going to affect different sectors. You have the stronger dollar. It will affect also real estate in the region because we're pegged to the dollar. Again, you have slower growth in terms of the economies, which will create wealth distraction, and then again you will have lower businesses in terms of the airlines, in terms of the port system, because trades will start to kick in. Geopolitical issues is again another big impact. We cannot quantify the risk at this stage because it's not clear. But if let's assume there is something really major happening in the region, we would say the global economies will be in a different situation. We would expect a recession globally.
We saw the incident that occurred in the off the coast of the UAE in the Gulf of Oman, in the Strait of Hormuz, with regards to the attack on the vessels.
Yes.
Saudi Arabia said 2 of its own vessels were impacted. What probability do you give now the chance of a further escalation here? And how are you reading the risk of a potential conflict between Iran and the United States? Is this something that investors really need to be considering at this point?
Of course. I don't see both parties will take more actions. I think the tension is already there for a long time between the U.S. and Iran, and also to some extent between the Iranians and the GCC countries. However, I don't see the issue will escalate more than that. It will remain as tense, but again, this is a high risk, and investors should watch.
Matt also has a question for you.
Yeah, hi Tariq. Thanks very much for joining us. We've been talking a lot today about the MSCI inclusion of Saudi Arabia in its emerging market index. Yes, we knew this from earlier in the year, but it's been revealed that 30 stocks from Saudi Arabia will be included. How hungry do you think global investors are for a slice of Saudi Arabia? Of course, we had the Aramco bond issue, which was heavily oversubscribed, but now 30 stocks, and the weighting on the MSCI Emerging Markets Index when it comes to Saudi Arabia, a bit over 1.4%. So do you see significant inflows into that fund? And just, I guess, anecdotally, how hungry are people to get into the Saudi market?
I think the opportunities in Saudi is massive, as you said. You're going to start with 1.4. It's going to increase to 2.7 in August, because it's 2 phases for the MSCI. You have the FTSE and the Dow Jones S&P already upgraded. So you have passive investors who already took positions in those companies. You can see SABIC has already 2-3%, foreign ownership. Al-Rajhi is around 6%. So investors are buying for 2 reasons. It's a significant weight also for the EM. It's going to be within Saudi and UAE and Qatar. It will be around 5%. So you cannot disregard that weight. At the same time, you have a huge spending coming into Saudi and lots of reforms. So you have a fundamental story behind it. However, I do see 2 concerns at this stage. You have the risk now in terms of the US-China trade, which has affected all investors in terms of outflow on the stock market globally, which will affect also passive investors to exit some of their positions. At the same time, you have a priced-in situation to a certain extent. The price-earning ratio for Saudi is around 17 times, which is very close to the Indian and the Chinese market. I would say there will be sell the news shortly.